All right. Good morning, everybody. TGIF, right? It's the third Friday of the month. That makes it OPEX. Monthly options expire today. Whew, man. Spit it out, huh? Red around the world, but Japan is bucking the system. You could say that either they're leading this move to the upside or that they're the last to fall. It's something we got to circle back to because it's the threat, right? It's a Friday. Their last greatest biggest intervention was a Friday, although they did follow it up on a Monday with more. But when they had that global intervention last year in October, that was a Friday intervention, global coordinated intervention. And we're kind of nearing that level again, and with the market down today, we got this possibility of that rug pull, flip, rip to the upside. So we'll circle back to Japan here. Otherwise, China's down the most, 1%. That'd be your China ADRs, JD, PDD, BABA, Baidu. Then Europe, say down a quarter. And all of our markets right underneath Japan, with the Russell down the most. But really, it's a tight race between the three. Well, between the four. We have a lot of Fed speakers today. The one that they're showing here is Loretta Miser, but she's not the only one. We've also got Harker, and these retail sales out of Canada was something we were worried, wondering if we were going to get anything out of that. You can see the impact from it, but really no follow through. Some spot gamma levels for the day. I will be throwing a map together, laying these out and posting it later on. But if you want the ES, so I only do the SPX, take a screenshot, draw them out on your chart or SPY. And the Qs. After the week that we've had with a lot of different economic events, this looks really scarce. There's still some volatility inducing possibilities with the Fed speak, but at this point, they're all just banging the drum on out of the same hymn book. So, really nothing here. Don't get me wrong, those retail sales out of Canada, they've got the capacity to be a little violent, but if we don't get any follow through on this, and looking at what we've already seen moving, it's not likely that they're expecting any volatility or follow through either. We can see the volume is up this morning. If they were worried, we'd see that at a lower volume, right? They'd be sitting out. Now there is some hedging going on, so maybe they're a little concerned. I'm zoomed in here on the right chart, so weekly. Just kind of reinforcing that idea that when we get above this 43.65 area, that selling pressure is really heavy. You can see how they prod it right back down again, keeping it pressed down. And we are inside weak breakout to the downside. If we were using OCR analysis, then we'd be looking at, lower high, lower low, and lower close. Granted, we are still inside of this dragonfly doji or graveyard doji. It's one of those dojis. I met someone the other day whose name was Doji, and I wondered what his what his parents did for a living that named him that way. Guess they could have just called him Oops. That's wrong. That ain't right. So you can see the indecision this morning in the market. This primes us up kind of nice. Now, it's not the best way that I like to approach this setup, but it's a good start, right? So there's these days where, it's been kind of a negative week. It was negative in the overnight hours. We've got this broad market bias of negativity. People are finally starting to load up on shorts, and we're down pretty good. All the news is negative, all the bias is negative, and then they rip that sucker to the upside and finish it into the close near the high of the week. And yeah, we're talking 44.35, 44.25. It's a 100-point push from where we are right now, right? 125 points from 4,300 to 44.25 at the end of the week. At the end of the day, think I'm reaching. The average daily range right now is $62. The market maker move on that is another $15. So that's what, 6 and 1 is 7. So that's 70, 2, 77. That's a $77 expected range right there. And that's the average for the day. We're not even talking about a rug pull or a short squeeze or anything like that. That's just a normal day in the market. 75, 77 points. So if we cut that in half, say 35 points, and add that to the 75 we've already got, we're over 100 points there, and we're still not reaching. So it's not exuberance, it's not wishful thinking, pie in the sky numbers. We can easily make that. Now, I've got a lot of stuff on my chart right now, right? It's just a very noisy, very loud thing. The volume's up a little bit. It kind of fits in with what I'm talking about. And I don't know that we're going to get this today, right? But we've seen this movie before. We've seen this game that they played before. So we do have the volume. We're at 140. We're not overly heavy in volume, right? It's just we got some volume. I got all the volatility levels, so we'll just deal with those first so we can get them out of the way, because they're what makes this chart so noisy. So any move to the upside today, if we were to go up, would have to get through this L2, then a volatility trigger and the 0 gamma levels, and then start focusing on that call wall up there at that 44.25 area. That call wall would be the target. It's the previous week's high. It's the high of the week, of our week, basically. And it's where there's just going to be so much selling up there that it's going to be hard to get through there, right? It's what a call wall is, basically. The put wall hasn't rolled down or up, but the call wall has been rolling down. So they've been bringing it down this week. I think they've got it close enough that we can run right up into it. So we get that noisy thing out of the way. We have an MDP right now. It's a missed daily pivot. We're underneath our daily pivot point, and we are a long ways from the weekly pivot. Now that's arbitrary. How far away from the weekly pivot is considered too far? I mean, I don't have a great answer for that. Visually speaking, we're a long ways away from it. We come over here and look at the distance to the weekly pivot point. We were about 2.4% away, maybe a little more, because I'm not being too exact with it. And we pulled back into it. And then on the same week, we got a little more extended, and we were over 2.5% away from the weekly pivot point. So where are we at now? Yeah, 1.5. So yeah, maybe a visual is just it looks worse than it is. We're 1.8% away from the weekly pivot point. I'd still say it's a considerable distance. So we'll add that to it. We're not too far. I'll take that back. We're not too far away, but we're a considerable distance from the weekly pivot. And we have a missed daily pivot at this point. We had one yesterday, but we did end up running in there and tagging it. So we didn't carry forward into today a missed daily pivot. This daily pivot, if we don't hit it today and it stays as a missed pivot, it'll matter tomorrow, quote Monday. It'll matter then. It doesn't necessarily matter now. It's just setting now. If you want to know more about missed daily pivots and why I care, Knox has some videos on YouTube. You can just go to YouTube, type in missed daily pivots, and you'll come across this trade strategy. I don't really do the strategy as a trade, but I definitely use it in my analysis, right? It provides a lot of insight. So it's worth learning. The reason I say this is because I don't want anybody to think it's mine. I didn't put it together. I didn't do the work to develop this, but I didn't, figure out Bollinger either, or all the other great stuff out there. Just learn from people that did the work, stand on the shoulders of giants. So any move today, if they rip it, right? That's kind of what we're asking here is, what if they rug pull? What if they do flip this thing and we start running to the upside? What's the problem here? We have to get through our daily pivot point. We would cut through the first ADR level, 43.26. We'd have to get through the 200-day moving average, and then the 20-day, and then the 10-day, then the full weekly pivot, the full ADR, 43.57. Finally up to the weekly pivot point, through that into a 20-period moving average, then into a 20-week moving average, and then a 10-week, another 10-week, and we're into a cog line at 44.11, and we're at previous week's high by 44.30. That's a lot of trash, right? That's a lot of stuff to work through. We're really looking at a day that could turn out to be like this. So again, I don't know that they're going to do it. I would be more apt to believe that we were going to get it if we were down more. We're only down 0.25%. That's not very much. So one of the things I'm looking at is, can we dump down first, get into this ADR half at 42.63, and then take a shot to the upside? It would add to that last hoorah, right? And we can see on the weekly here again, we're talking about having a day that's going to look kind of like that. Because if we drop down from our current location, we get into that 42.63. That'll be somewhere around that 50-period moving average again. Get a rebound off of that and run back up to the top, and we'd have another one of these, right? One of these dojis. Well, actually, we wouldn't. We'd have something maybe more like I don't got one. Maybe something that looks a little bit like that, but not quite, right? We would want to, yeah, there we go. It'd look like this. Closing up near the high after dipping down. One of these two. So again, I don't know that we're going to get it. I would like it better if we were lower first, and maybe we get that first. If we do start making casual moves to the upside, I don't think it's going to do it, right? This has got to be one of those rip your face off kind of rally days where all the flows come in, rising tide, every name in every index ripping 95, 99 names out of 100, just all doing it, right? We need that kind of participation. What's the catalyst for such a move like that, right? That's just not going to come in on its own. It's got to come from sentiment, from news, from something, right? So one of the things, anything out of the house could do it today, right? It doesn't even have to be any resolution of this current situation. It could just be a promise of some sort of resolution to this situation. That could jack us to the upside. Say the situation in Gaza with the trucks that are supposed to be coming in today. Maybe something kicks off over there really positive, and you know what I mean? Like it's going to be something sentiment driven, because there's really not a whole lot of economic stuff on the table today other than Canadian retail sales and Fed speakers. So it's going to have to be from an external source, something else. I don't know what that's going to be. And we're not down enough. I think we need a little more. So for just a grind, it's going to be a heck of a grind. Be a lot like yesterday, if that's the kind of, if we don't get a catalyst. Violent, choppy, nasty. And I'll add to that, if you're losing more often than you're winning and you're day trading, start with this basic concept. This is Globex. It's the overnight range from 6 p.m. to 9:30 in the morning. If we're inside of our own Globex price action when we get into the regular trading session, so 9:30, the bell rings, you look left, and we're still in this box, probably better off just sitting out, right? If you're losing more often than you win, quit doing the hard stuff. Start doing the easy stuff. And the easy stuff would start with don't trade in a tightly range-bound market. That'd be a really good start. Focus on the edges of that, because pivot points are pretty fantastic. That would be our own Globex high and or our own Globex low. From there, you can focus on yesterday's low, which wouldn't help us because we've been cutting through it all night long. Then this major pivot point here from news yesterday, the Globex low of yesterday, the RTH open of yesterday, and then the Globex high of yesterday. All that would be pivot points added to this fight to the upside, right? But the next point, if you're struggling, is if we're sitting inside of yesterday's price action and it's a range bound day that we had yesterday, then it's very likely going to be a difficult trading day today. Right now, we left the range yesterday, which kind of proves my point. But if this was our range today and we were sitting inside of that same trash from yesterday, you wouldn't want to try trading in that. It's very likely going to be as difficult as yesterday was. But yesterday actually expanded down. That gives us a pretty wide range to play with today. And I wouldn't hold it accountable and say, well, we're still inside of yesterday's range, so you shouldn't trade. Nah, that's a pretty wide range. It's likely that we have some good, clean price action in here because we've got the room for it. But to prove my point with yesterday, until we left the range, it was trash, right? I mean, look at that. Was it tradable? Yes, absolutely. If you got the skill set, you're nimble, go in there and get your money. I'm not arguing against it. But if you're losing more often than you win, look left. Where are we at in that box? What's the trading going to be like? Choppy, nasty, difficult. These bars are really big, implying that you would need a really big stop and that there's still no guarantee that price is going to follow through with the direction that it's giving you or the signal that's setting up. So the signals are trash. The candles are huge, so you need a really big stop, and there's still no guarantee of follow through. That's a recipe for disaster in a small account. It's not going to work. Yeah. I'm just saying, try doing the easy stuff. Grow the account out and the skills. Then you can trade in anything you want. Or pick a different market. Gold, oil, Bitcoin. There's some micro Bitcoin products out there now. In futures, no less. 10-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. We're a long ways away from that point of control now. And we fell through these zones relatively clean, nice. not as clean as I would have expected it to, but it's still, I think they did a pretty good job with it. We didn't leave much behind in a price shelf, and we're still in a classic P. So we can see the P shape. So if we continue to build along these lows, we're going to end up in a classic B. We don't have it yet. There's nothing but an air pocket here, and kind of looking at this low, you got to ask, like, what did we hit? Why do we stop falling? Pretty interesting question. I'd say it's an inverse product. Something else hit something else. Either way, we do have those lows setting up. 4250 is kind of the eyeball down here, right? That 4250 area. There's nothing down here to hold us up, to hold us back. We got another VPOC. So in all of those pivots that we were discussing earlier about a move to the upside, we can add this to it as well. 43.29. It's really close to the 43.32 cog line. And we're really close to this VPOC 42.73. I would like to hit that and then flip and rip. I don't know that we're going to get it, but that's what I'd like to see. And think about how far we've gone for the week, by the way. It's been pretty clean and controlled. So we're not oversold. They don't owe us a rip. But I think if they're going to rip it, that'd be the way they do it first, right? There's examples of this from previous, and we could do it here. 3 days to the downside. We opened and we went down just a little bit more, and then they rallied it back up. This isn't a fantastic example, but it does kind of suit the purpose, right? 1, 2, 3 days in a row, we're sitting at that doji level. We're right on the edge of the weekly expected move. Wouldn't make no difference to it at all to come down outside of that weekly and then come right back up inside again and challenge yesterday's levels starting with 50%. There's a lot of examples of this. 1, 2, 3 bar, doji to the downside, rips it back up, closes at the high of the day. 1, 2, 3 bars, same thing. 1, 2, 3 bars, same thing. You know what I mean? You see it. So while we are here, man, I need more coffee. This is the range for the week that we just went through. And while next week's is not yet set in stone, we can just get a feel for it. How's the volatility for next week? If the volatility is greater than the current week that we're in right now, then the range will be wider. And looking at this, next week's range is wider. I set the box there, and we can see this gap down here because the distance between that green line and this red line is bigger. And it got bigger because there's more volatility next week. Kind of makes you wonder, hey, what's on the docket next week? What's the economic data points that brought in this greater volatility? How about earnings from the Magnificent Seven or the Magnificent Five? That could be a little bit of it, but I'd also recommend, Seeking Alpha's got that weekend podcast. It's like Stocks to Watch or Catalyst Watch, and then there's the Breakfast something or other. It's all free. So if you don't have an account at Seeking Alpha, you don't need it. Just go to wherever you do podcasts at and type in Seeking Alpha Breakfast, and you should find it. It's a really great podcast that talks about what's coming up in the upcoming week, and it usually has things that we don't spot and that I don't cover on a day-to-day basis, like investor days and big AI events and things like that. It's a really great addition to getting ready for the week, right? Now, since we've topped out and we've got just this that we're focused on. There's something that I've been working on as a trade strategy called a half back break. You measure it from this point up here and this point down here, and that gives you 50%. What you're looking for is for that tag and a move to the upside. But when it doesn't, it's a 50 break, right? It's a half back break. And the target after breaking that half back is at least down to 25%. It's kind of why that line is in there right now. And we're there. So if we do get through that 25%, then of course we try to get down into the proximal line. If we get through the proximal line, we'll get through to the distal line. And don't worry about the fancy names. It doesn't matter, right? We're talking about 42.63 and then all the way down to 42.35. If we break that 42.82, 42.84, excuse me. So it's a half back break. And the target, the first target of that is 25%. We're there. We did it. Got it. It kind of adds to the idea that we could flip and rip. You like it? I like it. That same half back break, we didn't get it here, right? If we were to measure all of this and that moved to the upside, well, it didn't make it, right? It got shut down. Why that's moved. There we go. We didn't even make it to the half back level, right? We are 1% below the 10-week. And that is less than where we were. So, you know, like a wave, we are on our way back up. Now it can stall along the way. There's plenty of examples where it started to go back up and then it dropped back down again. Here, for an example, 3 days in a row, and it dropped right back down, up, and then it dropped back down. So just because we're starting our way back towards that 10 doesn't mean we're going to get there. 1% below the 10-day moving average. Well, let's flip that from a day to a week. And we're almost 2% below the 10-week. Now that's not very much. We've been much farther below the 10-week than this, right? Much farther. Now, last year, here's 2023. So everything on that side has been this year, and everything on that side was last year. Last year, we had some really good deep moves underneath that 10-week. But really, since the October intervention with Bank of Japan, we really haven't gone too far below that 10-week. Around 2%, maybe a little more, not more than 3% below the 10-week. So, you know, we're in a different environment than we were then. All right, I got Apple here on the daily. Actually, I need to go to this one just so that we can get make sure there's earnings are getting shown correctly. $11.2. So it's not the magnificent 7 for next week. That's not close enough. The volatility's got to be from something else. Microsoft next week. I mentioned this the other day. We got to get out of this zone, right? And I don't think we're going to get out of this zone on Microsoft until it reports. If it was going to have a run into earnings, it already would have, right? The run would have started sooner than this. That's why we look at the 21-day ramp, and that's past us at this point. We're just too close. There's also an 8-day ramp, but by the time we get through the weekend, we're too close for that already too. So Microsoft very likely is going to stay in this zone until we're done. But that doesn't mean that we can't do like we did yesterday, make big sweeping moves and then just come right back into the box. So it's worth looking at today. If we start moving around, that we could test the lows and come back into the box. We could test these highs and come back into the box. It gives you destination plays for, puts to the lows and then calls back towards the highs. We're talking, grabbing 30 cents on the dollar or 50 cents on the dollar. That's not bad for an options trade. If you were to activate the Bookmap, they offer you some free markets. And while I think that day traders could just literally trade SPY and the Qs with their most liquid options all the time, the fact that you can get Bookmap for Apple and Microsoft for free is pretty awesome, right? That's a huge leg up as opposed to other markets that you can try trading that doesn't have Bookmap. So, it's not perfect, it's free, and you get what you pay for, but even free Bookmap is better than no Bookmap. Solar's down the most. Behind that, nat gas and China names and China constituents, emerging markets, which China has no business being considered an emerging market. And on the other side of that, Bitcoin is up significantly. So we would anticipate that Bitcoin proxies would also be up this morning. Here's US dollar Japan on a daily chart. You can see the candle that we've got marked out. We're holding above that 50% mark. These last 3 days have now formed an IX10. So we'll just really kind of zoom in on those three. See how every time we got around that 50% mark, it was defended and bid back up again. And now we're back inside, but we broke outside of yesterday's range. And that's what we're challenging with today. If this starts running to the upside, there's the possibility of intervention. I don't see it though. This isn't enough, right? We're not, I would think into the 150s, 151, but look how close we are. We're at 149.96. I mean, we were at 149.99. Oh, come on, that's pretty close. We're there. It wouldn't surprise me if we get up a little bit higher and they start to intervene. But there's been some talk that maybe it's 151 now, that they pushed the goalpost back a little bit, and or that it might even be 152 now. So they want to keep everybody on their toes, right? They're trying to keep it to where people are still guessing, makes them a little more cautious in their trades. So they're, even last year in October, they were cagey about answering, hey, did you intervene? And if you read that Bloomberg article, the way that they identified that there was intervention is by looking at the treasuries, right? If a government, any government, is going to go and spend a crap load of money, it's got to come from somewhere, and it comes from the treasuries, or you could just watch the treasuries and see if they intervened or not. So they were cagey about answering the question until enough proof was handed to them showing that we already knew they had intervened, and then they went ahead and said, yeah, okay, well, we intervened. So, it's not like they're waving flags and telling everybody, hey, we're going to intervene on Tuesday. I think what might be worth watching is the 10-year from Japan, and just watch that 0.864. Right now, we're not even at the close of yesterday. So getting above that would be a good place to set an alert, because it would inform me that we're still driving higher. And then if we break out of yesterday's candle, I would be concerned. That'd be the ticket right there, right? Taking it over to commodities for a minute with crude, we had that halfback level that was holding just fantastic down here. Look at that defense. And they ripped it back up, and now we're testing against the top side breakout of this candle. Just highlight it to make it easy to see. That was the zone that we were dealing with. And if you look left to this big candle here, that's the top of the range that we're now dealing with. So we'll just still this box and make it a little bigger. So the thing is, we're there for half back break. Let's just turn all this other stuff off and measure this. We're through it. If that's the zone that we're measuring, 50% is where we should reject and continue that move to the downside. And we didn't, right? We're through it. We're above it. So this is now a half back break. What we would target is 25%. We would target half of this distance to the upside. $91.63. Just call it 92. Save yourself a little trouble. That's the upside target in crude if we can get this breakout, right? Because it could still reject. But that's some really nice defense down here. And what we're trying to define is, are those big sellers that were sitting up here, are they still there? Is there any liquidity left at that zone, or are we going to be able to get through it? Even if we get through it, we could still drop back down afterwards, right? Those people that are defending or whatever selling is going on there, they could say, well, why am I selling at 90 when I might be able to sell it at 91? So, they could defend here. There might not be any defense left there, or they might decide to defend it higher. But we've got the history of them defending here so far, and we need to see if they're done yet. No reason to make assumptions. So crude's worth watching here. If you want to trade this, when you don't have oil, you can trade like USO, kind of focus on that, or any of the oil companies, open USO up, open XLE up, see what's in the basket. Gold has just been on a tear, and I think this caught a lot of people by surprise. It was like, it's just a little bit of a reflex, and then it kept going, and the reflex is bigger and bigger, and just keeps going. It just keeps going. I don't know what to do with it. It certainly moved really fast, really far, and at this point, you can't try to go long here because it's already moved so far, but you can't try to short it here because it's demonstrating a huge amount of strength, and we don't know that that strength is done yet. So the only thing I recommend in markets that look like this is go into a smaller time frame and then trade it, and if you can defend your position and it gets far enough away from you that you can then swing it or hold it for longer, then sure, go for it. But otherwise, from this time frame, from the daily, well, there's nothing here that we can do with this thing. I'm advising caution for anybody trying to short this here. Like, oh, I'm gonna sell me some calls. Nah, I don't think it's done. But we don't have any proof of it's done or not done. Nat gas broke the range that we've been focused on forever. I think it looks better on a weekly. So there's that range. We focused on it all year. It stayed underneath it. It finally broke out. But this weekly candle was supposed to keep for that 50%. So it needs to do that. We got our halfback level. If it's going to bounce, that would be where it needs to do it. Now, of course, if we do this another way and we take it to the highest and the lowest and we measure from the breakout point, then we're through the 50%. The halfback level becomes 322. But that's 324. So isn't that close enough? It really shows that 322, 324, that either way, it better bounce there or we're coming back down into this zone, right? That's a pretty good move in Bitcoin. So we have this selling pressure. If I can go back far enough. We have this selling pressure from back here. You see on the weekly, that really stands out for all that selling pressure. But we've got a heck of a push here and it's driving through that zone. We weren't able to get through it last time. It took a rejection and came back down, but that was news. It was a quick, fast catalyst push to the upside. Oh, shoot. Now I broke it. So let's see if we can get through there or not. If we can, we still got headwinds, but that's a pretty fantastic move. And the reason it matters, if you're looking at that and you're thinking, so what? I don't trade Bitcoin. No, but how about Riot or Mara? Hut or Hive? Those are all up this morning. Bitcoin is up the most, but we got pot stocks right behind that, and then uranium, and then precious metals like silver, gold miners. With Bitcoin being up the most, we go into the crypto sector. SOS is another one I didn't mention, but it's up as well. MSTR, which has got, I mean, it's not fantastic, right? But it's got some decent, I'll take that back. It's got options. Let's just say that it's got options. So this selling pressure, and it's through that, it's above it, but we still got all this, right? So headwinds all the way back up. We're just talking about a day trade anyways, but that's a fantastic start, right? 358, kind of want to keep it above that. What did I say? 352.84. And then things like coin, you see how it's already tested this low this morning. A little bit of a concern. So names in the S&P that are up at least 0.5%, there's only 6. And none of them are the Mag 5 that we need, or the FANG names. And how many names are down 0.5%? 16. 16% of the S&P is down 0.5% or more. And we start to see some FANG names: Tesla, Google. So we don't have the assistant of the FANGs. There's some financials that are showing some weakness in here too. This will be what has to change if we're going to get that rip your face off rally day, right? We're not going to get it. We can't get it if we don't have that kind of follow through. Got to have the FANGs in there. And it shows pot stocks are up, but I don't have, none of mine are in my list are really up all that much. Tilray 0.5%, ACB, XXII. I mean, none of those really look all that fantastic. One of the things I like about seeing that up this morning is we've been focused on pot stocks as a short covering rally. So Bitcoin short covering, pot stocks maybe in a short squeeze, that's a good start. If we can get the S&P demonstrating that short squeeze today, that'd be helpful. And then we've got options expiration, so got to keep an eye on the fact that the flows might be a little tricky. I have been talking about it in a very positive way for the day, but right before we wrap up here, let's think about it from another point of view. What if they don't? Right? Like, so what? I mean, they can take it to the downside. So what if they don't come in and rug pull and we just keep going down? Then in the S&P, let's focus on all this buying down here where they came in and defended the lows. 42.30-ish. You could say they really started picking it up a little higher than that, but yeah, somewhere in this, I like a nice round number. So 42.22, that'll work. Even 42.20, if we want the distal line. Oh, wow, that's a little lower than that. 42.16 is the distal, right? Kind of put it into a little bit of perspective. $42.71 is the 50% mark. So if we do break through it, then we're looking at, a half back break. $42.45 would be the 25% mark for getting through that first zone. So that'd be a nice reversal spot for the half back break. Otherwise, if we get through that, then we'll target those lower levels and all that buying recovery, right? That buying defense. this is the right setup for one of those recovery flip days like this, except this has 3 days to it. One day, the next day, look at this. We closed here. We opened gap down way down there, had a little more to the downside, and then they ripped it up. That's the kind of day that we're looking for today, right? One of those gap down, rip rally kind of days. Now, it doesn't owe us that, right? Same thing here. Closed here, opened there, went down a little more, and then ripped up, closed at the high of the day. Or same thing there. So that's what I got for you guys. Be careful, be safe, have a good weekend, and come back